0.85%. And it is time now to take stock and check out some of the experts' best buys and sells in stock markets around the region. Today, we're joined by Philip Chan, Research Director at Shanghai Hong Kong International Securities. He joins us now live from our Hong Kong studios. Philip, good day, welcome, and thanks for coming on.
Hello, Martin.
Okay, Philip, let's take a look at your first pick today. That is a company called Shandong Huaneng Power Development.
Shandong Huaneng was the first Chinese power generator to list on the New York Stock Exchange. But Beijing's been on an austerity drive, and that's put a dent in the expansion of the country's power industry. Analysts say that's why Shandong Huaneng Power Development has not performed well since listing. The group operates 3 power plants feeding into the Shandong grid. It is building another, and it's just won approval to develop yet another 2.
Okay, Philip, Shandong Huaneng, I understand you're calling in an accumulate on that. Now, how exactly does that differ from a straight buy?
Yeah, it differs because we think that it could be currently fully valued, right? And therefore you should wait for it to weaken because of other factors which may affect the market, which have got nothing to do with the company, and therefore you can accumulate stock at a lower price.
Okay, lower prices. Is there a certain level that you're recommending people watch out for?
No. In this case, there's no lower band. We would just look to. It's been around the $8.75, $8 level for some time. We would look to accumulate around there, basically.
Okay, but I mean, broadly speaking, Shandong Huaneng, part of the power industry in China, that has been pretty hard hit by Beijing's austerity program. I'm sure that is one of the victims as well. Doesn't this seem to put a damper on things, or no?
That's what you would think, but actually they, at the end of last year, they received final approval for 2 projects which they'd been applying for some time, and that was seen as quite positive for the group because, here we had sort of a slowdown in fixed asset investment in China, and then they suddenly had were given the okay by the State Council to go ahead and build 2 new plants in Shandong province, and these should affect profits in 1998, 1989, that time frame. But it's just the fact that they're allowed to build them in such a difficult environment that is positive for the company.
Okay, so those 2 projects were delayed earlier. Now they've been given the green light to go ahead. But just a few days ago, we understand there were reports from Beijing saying that they intend to scale back or scale down capital investment. Is that going to affect, or how much is that going to affect Shandong, if at all?
I don't think it's going to affect these projects because these are the only 2 which the company is looking to start in the near future, and they have already scaled back their level of investment in these projects because originally they were going to hold bigger shareholdings in each of the power plants, but they've been scaled back already. I don't think it's going to affect the company anymore in future. Not in this particular case, anyway.
Okay, now, as far as the electricity that this company produces, of course, a big issue is pricing or tariffs earlier on, very controversial because of the inflation, the very high inflation that China was laboring under. What is the outlook for tariffs now?
The outlook for tariffs is still not. I mean, it's not that exciting because there has been a cap on the tariffs for this company because every tariff increase that companies want to make has to be applied through through state channels, and they were refused a tariff increase early in '95, which has actually put a dampener on the stock over the last few months, but I think that there has been some speculation in the stock over the last, just particularly over this last couple of months since the announcement of the go-ahead with the plant, that they may be able to get a tariff increase because fixed asset investment may be loosened, and also the economy is picking up in China.
Okay.
But it's speculation only.
Right, okay, well, it sounds like good news, even if it is speculation. We'll have to see whether that comes to pass or not. Quickly, last one on this stock. Any downside at all?
Yeah, the downside is really if really electricity usage follows the economy, and if the economy doesn't pick up, then the profits for the company will be probably just mediocre. They'll just show mediocre growth in the medium to long term. That's if the economy stays as it is. But if the economy is going to pick up a little bit, then they should produce quite good profits growth.
Demand should be there as well. Okay, Philip, let's move on and have a look at your second pick today. That's a company called Shanghai New Group Asia.
1995 wasn't a good year for hotels in Shanghai. Occupancy rates dropped and room rates were capped across the country. But Shanghai New Asia Group expanded aggressively and was able to sustain strong earnings growth. Shanghai's prime shopping and commercial districts are home to New Asia's 3-, 4-, and 5-star hotels, but they also provide the location for another major business, chicken. New Asia owns half of the Kentucky Fried Chicken franchise and last year doubled the number of the Colonel's outlets.
Okay, Philip, you're calling and accumulate on this too. Now, this is a big hotel player, especially in Shanghai, but I understand that the last year was pretty tough for hoteliers, for the hospitality industry. How has this company weathered the last 12 months?
They've actually performed better than than you would expect, because they have a wide spread of hotels. They've got 18 hotels in all. Some of them are still being built, but they actually range from ungraded hotels right up to 5-star hotels. But the majority of them are in the middle segment, and this segment has not been affected so much. They have obviously seen a slowdown in visitors and a reduction in occupancy levels over the last year, but they've not been affected as badly as, say, the 5-star hotels.
Okay, so it sounds like basically they're hedging, trying to cover all bases. But I mean, this aggressive expansion program, isn't it going to be, excuse me, a while yet until it translates at the bottom line?
Yes, because I see at the same time as 95, the hotel industry was in difficulty. They were also expanding quite significantly in acquiring new hotels, renovating the hotels, going into other businesses, and that required quite significant capital expenditure, and that will affect 95 earnings. We're looking for very little growth at all. 96 and 97 are much better, we think, and that's where you're going to see the fruition of the investment that they made in 95.
Okay, you mentioned a few seconds ago going into other businesses. Now, I understand it already runs a very successful Kentucky Fried Chicken franchise. Now, they're bidding, I understand, for the city's first chain of convenience stores. Can you tell us more about that?
That's right, yeah. At the end of last year, they signed a letter of agreement with Circle K Group of the US to open stores in Shanghai. The final details of this joint venture have not been worked out. We understand they're probably going to take something like a 25% interest in the joint venture, and they're looking to open something like 100 stores in Shanghai over a number of years. The amount of capital expenditure is going to be controlled, so it could be. I think this will be first time for 24-hour convenience stores. It won't be the first time, but it will be the first time on such a large scale, and a chain of them as well. It'll be, I think, quite a significant coup for the group.
Okay. I mean, overall, wouldn't this stock, as the last one, Shandong Huaneng Power, be also susceptible to any possible downturn or continued slowing of China's economy? I mean, things like fast food, things like going to a convenience store, surely things that you do with disposable income, no?
To a certain extent, yes, but you see, these convenience stores are what they are, convenience stores, and they're catering for for local tastes as well, and just things which are available all the time. The other thing is that remember that this group operates principally in Shanghai, which is one of the richer parts of China, if not one of the if not the richest, and therefore they are shielded to a certain extent. I've not seen any sort of sign of a slowdown in Shanghai in recent months.
Okay, so pretty well insulated if the economy does turn a little slower, turn down a little slower than people expect, a little faster than people expect. Okay, we'll have to move on and take a look at your last pick today. That's a company called Star Paging International.
If your beeper goes off in Hong Kong or you answer a cellular phone in China, the service could well be provided by Star Paging. It's a Hong Kong-listed company that has grown to be the second largest paging service in Hong Kong behind Hutchison Paging. In China, Star Paging's partner is the People's Liberation Army. They're using a profit-sharing cooperation agreement to develop cellular phone and beeper networks. Star Paging is hoping to win a special Hong Kong government license to provide the new generation personal communication network services.
Okay, Philip, Star Paging there, you're calling a take profit on that. Now, since we had a few words to say about the difference between accumulate and a straight buy, what's the difference between take profit and a straight sell?
Yeah, the difference is that we expect it to slightly underperform the market in the short term, and therefore it looks fully valued. So you would just take profits on it, but it could actually go higher. So you would just be taking profits as it's rising. That's where we mean by that, rather than just straight sell, which means straight sell as it is.
Okay, understood. Now broadly though, is it also because basically this company is in a business, paging as well as cellular phones, which is pretty much mature, saturated, not much growth left?
That's right. In Hong Kong, the paging industry is pretty much saturated. There's many players in Hong Kong. We don't really foresee much growth there. They've been trying to diversify into other areas, and I think that's where they've got to look.
Okay, we'll talk about diversification in just a little while, but we mentioned in our little video clip just now, PCN bidding for one of the 4 to 6 licenses that are going to be thrown up. If the company gets that, is it going to be a totally different story then?
I think it will be a different story, but remember, I think there will be also initial excitement on the shares, and they'll probably be re-rated. But you have to remember that the capital investment involved is substantial. They only have a certain stake in the consortium. It's not controllable. They don't have over 50%. They have a 27% stake. And the other thing is that to lay down PCN is going to take 2 to 3 years. I can't really see profits from this coming before 3 years. Okay,
Philip, a quick last one. Now let me jump in here. As far as diversification goes, I understand that it has a considerable exposure into China. Some people even consider it something sort of a red chip. What about that?
Yeah, it is a little bit of a red chip because their exposure to China is quite substantial, and we're looking for something like 20 million profits just coming from their cellular phone operations in China. They have been expanding into pages as well, but for the time being, that paging operation in China is losing money. They're looking to manufacture the pages in China as well. They're trying to start up the manufacturing capability. These are plus points for the company, yeah.
Okay, Philip, we'll have to wrap up with you there. Thank you very much for joining us. Good to talk to you today.
Great, thanks.
And we have been taking stock with Philip Chan. He's Research Director at Shanghai Hong Kong International Securities and joins us live from our studios in Hong Kong. Finally, a look at the latest in high technology today. Handheld video, a clockwork radio, and dazzling bicycles.
Technology is brought to you by Audi.